I was discussing. I don't know if I sent this to you or not. Did I send it to you? The flag.
I saw that.
So I'm trying to figure this out because I want to debunk all possible theories that could be conspiracy, which is um, the lighting. Maybe the lighting was bad, but white still looks like white, right? Like, so I'm looking at it going, the lighting was decent, and I looked up flag code, and I have a couple Marine people that we know who are retired Marines and military. There's no code for either blue, all blue, and there's no code for black stars. So the only thing I ever got, which is totally speculation, it's not, there's no official to anything, but the only thing we've got so far is possibly surrender or be destroyed, which is kind of like a message to the other side. Either way, it's very strange.
That it is. The only thing I've ever seen on the U.S. flag was the gold border,
Yep.
around the flag.
The maritime banking.
Yeah, it was right. So that was, the maritime flag as opposed to the, United States of America. There was the corporate entity of the United States, and that was the corporate flag. That's the only variation I've ever seen outside, of course, of flying the flag upside down, which was the sign of distress.
Correct.
I've really never seen anything about the colors of the stars. That's new to me.
I know, and there's nothing in code, so whatever it is, I mean, and I keep going. I'm like, is it light? Like, I want to make myself wrong on this because I'm like, it can't be this obvious. He didn't. There's no way they did something this obvious, but lighting just doesn't make sense because it wouldn't make it that dark. But, sir, how are you? It's been a long time.
I'm great, man. It's good to see you. Things are going well. It's been like crazy as hell around here, but it has been a very interesting time for all of us. But yeah, things are going well.
Is there any silver left on the planet?
There is. Yeah, there is. I know that, there have been some dents in the market, but for all intents and purposes, the analogy I gave you the other day when we were chatting, it's kind of like, I would say the entire industry is like a restaurant, and every table is filled, no room at the bar. There are a few people standing outside waiting, and there are just about as many people leaving as are trying to get in. But if a few more people show up, those lines are going to get a little bit longer, and the wait to eat is going to get a little bit longer. Things are really tight. And, I always found in all the years I was doing this, there was lots of overhang, where a few of the dealers always had a lot of inventory. And even though some might be short, right now, nobody's got any overhanging inventory. Everybody seems to be going through. I mean, we are going through inventory as fast as we can accumulate it. And it's been that way since the middle of the summer. And it's been unusual because we tend to get some slowdown once in a while. There's no seasonal activity per se to the metals, but summertime with a lot of dealers going on vacation and guys taking breaks, there's some sort of slowdown. It just didn't happen this year.
Just slammed, busy.
Yeah.
And in a good premium too, right? Like is the
premium? Yeah, in a good way. The premiums on silver coins keep creeping up, and it's been an interesting thing to watch while the price of silver has actually been drifting a little bit. And I can get into that and talk about what's going on there. It's about the U.S. dollar. But even with the dollar strengthening and the price of silver somewhat volatile, drifting a little bit downward with the uprising dollar, the premiums on the coins keep climbing, which is that indication that the supply is still extremely tight. And no one wants to step out on a limb and short any inventory. Everybody is dealing with what they have, and if they don't have it, they're basically saying, we'll short a little bit, but that's about it. We want to wait till we have the inventory to fill orders. So, I've been at this a long time, and it's a rather unusual thing for us to see the entire industry be so very tight with supplies that dealers are sort of almost hesitant to sell their inventory. I think the fear is, will they be able to replace it? And if so, will it cost them more? And that's been the prevailing mentality I've seen going through this market all year.
That makes sense. Man. So how many times has the euro and the dollar been the same at 1-to-1? Is that normal?
Not often. It happened at the very beginning when the euro was first offered in the early 90s. They were pretty much at parity. And then little by little, the euro strengthened a little bit against the dollar, a little drifting here and there. But it's been about 20 years since we've had a strengthening dollar to this level. In fact, right now, that dollar index that they look at, the ICE index, it's the highest it's been in well over 20 years. I really have a hard time remembering any time the dollar's strength against the world's currency has been as far away from the rest of the world's currencies as what we're experiencing now. And it's becoming a real big problem. This is a offshoot of the Federal Reserve's actions of raising interest rates that I don't know that they anticipated.
I can't. The Federal Reserve. I can't with them anymore. It's just a mess.
Well, listen, I've been dealing with them for 38 years now, and it's been problematic. But what surprises me is, you and I can talk about this, and we'll get this. Okay, I believe that there is a fundamental difference between the reality of what's happening in the real world, and not only the perception, but what they're trying to promote as what is happening. And occasionally, the gap between those two things, what they're trying to say is happening and what's really happening, smacks them in the face. And it's like somebody just comes up and just smacks them right across the head. It's a shock to the system. So it started with the Fed's nonsense about the inflation system and the old inclusive temporary inflation and this nonsense that it was going to fade away very quickly. That caught them kind of with their pants around their ankles.
But I can't buy. I will not allow myself to buy that they're this stupid. Does that make sense?
Yes. Yeah. This is where I started struggling with this initially, is when they started this stuff. I'm like, are they really this blind to the reality, or are they really trying to push an environment out there that they want people to believe? And I have a feeling it's somewhat of a combination of both. But I think they're misled a lot of times. It's sometimes like, too much information can make it very difficult to see the bigger picture. And, I was a little shocked this last week when the consumer price index numbers came out, and everybody on Wall Street was shocked by how high the number was. They all expected the inflation had faded away. And when the number came out, it was such a gap between what they thought and what actually happened that the stock market dropped like 1,200 points in response. I mean, there was this knee-jerk, overwhelming reaction by all the traders who suddenly said, oh, wait a minute, inflation didn't fade. That means the Fed's going to remain aggressive in raising interest rates. That is not good for stocks. Therefore, our thought that the stock market was going to be going up a lot going forward here because the Fed was going to start becoming more dovish and slow down their interest rate hikes, that all faded out in one day when the CPI number came out. And again, I don't get why they were so shocked. I didn't think that there was going to be a much significantly lower CPI index. And, I don't have access to all the information these guys on Wall Street do. And yet I think most people could have put that together and said, no, that's not going to be the way it is. But this gap between reality and perception has been so wide at times that it's catching the markets by surprise.
But are they so out of touch that,
Yes.
So I'm on the road, right? And I'll go to the coffee shop in the morning before I go to where I'm going to go to the event, right? And anyway, depending on small town or city, I was in Spokane, Washington, and I'm paying $5 for a cup of coffee, right?
Okay.
Like a medium cup of coffee, like obviously like a gourmet coffee place, not necessarily Starbucks, but Starbucks too. Starbucks is still $3-4 for a coffee, or like Americano as they call it. And sure. I'm going, okay, that's inflation, because coffee doesn't cost that much technically, other than because inflation is pushed out. I remember going to the diner with my grandfather when I was a kid, and it was $1 for a coffee with free refills. Now, obviously not necessarily the same quality, but still, it was like unlimited for $1. So are they clueless to the idea that people are spending $7 on a dozen eggs, $5 on coffee, and it used to be far less?
Yeah, well, here's a good example of that. So that's a perfect example, the gap between the reality and what they're trying to suggest. So if they're trying to tell us that the inflation is fading and it's transitory and it's not a big fundamental problem, the issue that they're dealing with now is that the average person is seeing inflation in their day-to-day life to such a large degree that they can't ignore it. I mean, when inflation is 3 or 4%, that difference in the cost of the cup of coffee isn't quite as obvious or
Sure.
apparent from what it was 6 months or a year ago. But the rates have been so high that everything people deal with has cost significantly more, and they absolutely experience it in their day-to-day lives to such a large degree that the public isn't ignoring it. And I think the Fed was hoping that the public would sort of go along with the game plan, which was that the Fed had this under control and that their rate hike system was going to fix the problem and the inflation was going to drop back to the Fed's 2% target, and that 9% inflation we had was an aberration and it was going to fade away and it was all transitory and there's the end of the problem. But that didn't work out. And I think they were also really behind the curve of recognizing the impact of what happens when the Fed raises rates against the world's currencies. This is a very unusual problem because it's led to issues that I don't think they anticipated. Like all the debt that's out there by foreign countries and third world nations that are owed in US dollars becomes progressively more expensive for these countries to pay back when the dollar strengthens. And that's something they didn't count on. So it's causing suffering around the world. The US dollar's strength is fundamentally causing other problems that they didn't expect. Europe is facing the same kind of inflation pressures the US is, but they're not getting consumer spending the way we do. You know, our consumers are still spending. I mean, we're not happy about paying more, but you did buy the coffee. You didn't turn around and walk away, right? And you're acting like most people in America.
Is the pain worse than the reward? Is the reward better than the pain? That whole mentality.
Yep. So you go ahead and bite the bullet and make the extra purchases. And, you know, look, for some people that are on a tight budget, they have to start adjusting things the way the consumer price index does. So if you can't afford the meat, you might look at a meat by product as opposed to the beef because it's cheaper, or you look at chicken instead of beef, or you start looking at, you know, and you progressively work your way down to more affordable items. But there are a lot of things that people can't afford not to buy. They have to keep purchasing them. So they are paying more. But we are really experiencing a very unusual situation around the world as a byproduct of the Federal Reserve's stance to try to raise interest rates to fight off our inflation problems. The byproduct of that is not only have they slowed the U.S. economy down, but they've raised the value of the dollar against the foreign currencies to such a degree that foreign investors now are struggling to try to keep the value of their own currency intact and their wealth intact. And it's so bad there that they've decided to put their money into the United States. So the third world nations, the European nations, the Asian countries, they are dumping money to the largest degree that we've seen in decades into US-based investments. That means they're buying US stocks. They're looking at US treasuries, even though they're paying, you know, minimal interest. It's still better than the negative yields that you're getting in the foreign world. So all of this money pouring into the U.S. has raised the dollar to levels we haven't seen. That dollar index, I remember talking about it when that number was at like 93 and thinking that was pretty strong. We're at 110 now on the dollar index. That's a level no one's seen in 20, 25 years. And as a result of that, because gold and silver are based around the world and denominated in U.S. dollars, when the dollar strengthens, it means gold and silver get cheaper in dollar terms. So here domestically, gold has gotten a little less expensive, and so has silver, not because fundamentally anything has changed or the inflation problem has gotten better in the U.S. It's just that everywhere else around the world, it looks so bad that to look at the U.S. as a safe haven has become the default. And even U.S. investors are now looking at bonds thinking that might be better than stocks, because look what's happened to the stock market ever since the Fed started raising interest rates. And I remember the last time you and I talked, I think I pointed that out, that I was really concerned how would the stock market move forward if the cheap money that had been driving it the past couple of years suddenly disappeared. It's the proverbial somebody stole the punch bowl from the party. And it was the Fed. They came in and snatched the entire punch bowl by raising rates and taking away the availability of cheap money. So now you can't drive stocks by just buying up your own stock because you can borrow money for nothing.
Yeah, I remember we talked about that in depth, and the fact that that's because that's how they shot the market up as high as they did. Technically, I mean, in basic verbiage. And they're calling now. Do you think the interest rate is? I mean, I'm sorry, the inflation rate is really 8.2%. Is that? I mean,
no. Oh no.
What would you say it is? I laugh at that.
I think they're off by about 50%. You know, I think that's about average for them anyway. Remember, it was like in the 90s that they began to.
So you think we're like 12-ish, 12, 13%?
I think it's higher than that. I think it's
really?
about 14 or 15.
14, 15%. Okay.
Yep. Yeah. In real terms. And, I remember when the CPI actually was a basket of food and goods and services. It was a loaf of bread and a gallon of milk and a gallon of, it was the actual items. And
actual food that Americans would spend money on.
Actually spend money on. Yeah, the real physical stuff that you'd actually go ahead and buy. And as the prices of those things rose faster than government wanted to admit, they began to alter the consumer price index by changing the way they calculated it. So they took out food and energy, and they took out things they said were seasonally volatile, and they kept tweaking the number until they could produce a statistic that was more palatable.
They massage everything to get the number they want.
Absolutely, and completely cook the books, as we used to say, to make that number appear lower. Most of that was because there's a COLA increase that the government has to deal with. Cost of living increases it has to pay out based upon whatever the statistical data shows inflation to be. They have a vested interest, the government does, to maintain a very low consumer price index and inflation number. They're going to try to curtail it as much as possible. So they've cooked that number down, to look much lower than it really is in the real world of actual people spending money on a day-to-day basis. And that gap, again, here's that thing again, the gap between the reality of what you're experiencing and what your customers are seeing and what we're seeing versus what the government is telling us is getting wider and wider. And every once in a while, the difference becomes so substantial that something cracks and there's this overwhelming knee-jerk reaction. And that concerns me because that means the volatility of just about everything comes into play.
God, and now I have yet to study this too deep. So you'll have far more, obviously, information on this than I will. But are they not getting ready to put it up another 1%? The interest rate, is that what they're doing?
At least 3/4, I think, tomorrow.
How do you do that without killing any momentum there is?
Well, keep in mind that in the end is really what they're trying to do to a degree,
right?
Is use that tool to slow the economy down, because what they're thinking is that it's inflation that's the problem they have to focus on more than the overall health of the general economic environment. So they have to make a choice. The choice is, you can let the economy run with high inflation and we'll have a strong economic growth, but we have a lot of inflation built into that, and that's not healthy for a lot of individual people. And we saw the kind of the backwash, the upcry from the public, to the point where even the president went before the news people and said, hey, this is my number one priority now, inflation. I'm going to do everything we can do within Congress and the government to fight inflation. Why did he suddenly take that stand? It wasn't because the inflation numbers were really climbing. It was because the public reacted to it. The public was saying, hey, we don't like this. So the Fed is trying to balance this, raising rates enough to make the public happy by fighting back inflation. The problem is trying to do that without creating a recession. And I don't believe they can pull that off.
There's no way they can pull this off without dropping it at least into a recession.
I think you're right. I find it hard to believe that they can manage this because it would require the perfect soft landing. And I just don't think the Fed can manage that because, first of all, they're running with data that's months old, and they're forecasting based upon premises that are turning out not to be accurate. I mean, the Fed does not have a great history, even in good times, of being able to manage the economic environments properly. They always make mistakes. But right now, I think they're just literally guessing. It's just shots in the dark to try to do things that no economic environment I've ever seen has afforded the Fed the opportunity to slow down an economy enough to fight off an inflation at this level and not put an economy into recession at the same time. I don't see how they're going to pull it off this time. So I believe we should be prepared for this economic slowdown. And again, this slowdown is having an interesting impact. This slowdown in China, slowdown in Europe, slowdown in the third world emerging markets, it is creating a motion of money that we haven't seen in decades, all pouring into the United States. Because when we talk about it, you and I, and we say, wow, we have this inflationary problem and costs are going up and there's volatility in the stocks, so there's a lot of uncertainty. The average person is getting very uncomfortable either having large amounts of money in the bank or having large money in the stock market. because both of them do not look particularly attractive to us because we're intelligent enough to see the problem. Yet, as bad as it appears to us, if you were outside the United States, we still look really good. I mean, think about it if you were traveling. When the dollar's really strong, you get a lot more bang for your buck if you travel out overseas, right? It's great to travel when the dollar's really strong. You go
it's like
to
free
Europe,
vacation.
Sure, you get a lot more for your money, so to speak. But the reverse is also true. So for foreign investors, not only is their debt load going up because they have to pay debt back in US dollars that they've borrowed with a strengthening dollar that's making that debt harder and harder to repay, but also their currency is going, becoming much, much weaker in US dollar terms. So they're getting less here, we're getting more there. It all works out very well for the trade, but it does fundamentally create an interesting flow of capital. And it's this flow of capital that has been driving the current environment we've seen the past month or two. Amazingly strengthening US dollar, driving down commodity prices. I believe gold and silver are on sale because this is
they are on sale.
They are. It's insane. Because with the dollar strengthening, gold has become cheaper in dollar terms. It's more expensive in euros. It's more expensive in yen. It's more expensive in yuan, but it's cheaper in dollar terms. And that's a great opportunity for people to try to build on their positions.
I'm going to start chanting gold standard, and the Fed became, and the Fed became a chant.
Hear, hear.
Ron Paul started it, not really, but basically the modern version of starting it. The other day at CPAC, not really the other day, but maybe a month or so ago, Steve Bannon goes on stage and says, "And the Fed," and I go, "Oh, we're going hardcore." I'm going to start chanting gold standard, and then I see this BRICS thing happen, and Saudi Arabia wants to go to the BRICS nations. Does this upset the whole apple cart, Fred? I'm telling people this is my opinion on it, and I think I'm right, but you can tell me. If Saudi Arabia decides not to take dollars for oil anymore, does that not end this whole thing?
It doesn't end it, no. It creates a lot of pressure, though, because, think about Argentina as a solid country, as an isolated nation, right? They've got 60% inflation. They've raised rates to 60% annual inflation. It's hard to even imagine, right? You think 9% is bad. Imagine what it would be like if you lost 60% of the value of a dollar every year. So you've got $100,000 sitting in a bank account, and next year you've got $40,000 worth of buying power. That's a pretty big, tough hit for people to take. Now imagine that year after year after year, and no recourse, no other option for you, all right? So when you experience that on an internal basis, the reason for that is because I wouldn't feel comfortable, and I doubt you would, stockpiling Argentine peso as a safe haven. Right? That wouldn't make any sense to you with a 60% inflation rate and a government that can't control its spending, that owes money to everybody, has to now repay in stronger dollars. Things don't look really good there. So they experience a massive problem. Now, the U.S. does have an advantage. And this is the reason I don't know that the Saudi Arabian impact would completely destroy the dollar. It will definitely have a dent. But remember, the dollar is still required to be used around the world. And central banks around the world still stockpile US dollars. And in this environment, more of them are adding to the US dollars in their stockpiles because, again, we're looking like a safe haven. Because there's that worldwide demand for dollars outside the US, we do have the ability to sustain a lot more bad news and bad economic situations than a country like Argentina, which is much more isolated.
Right.
So it could have an impact. And the more of these things that happen, the more countries line up that, try to push back against that, let's say, being force-fed the US dollar, the more problems it creates for us. Because if we can't sell the US dollar around the world and force feed the dollar to other central banks, we're going to start to have the same problem Argentina does. If people lose faith and don't want to hold dollars, now all the internal problems remain internal. If we can't sell it off, by having all these foreign countries demand our currency, then just like Argentina, we'll start to experience inflation rates that would skyrocket. I just don't believe that the guys that own the Fed and the central banks around the world want to see the dollar come to a complete end at this point.
No, absolutely not.
I don't think that's in their best interest.
No.
The disruption would be overwhelming, and it doesn't benefit anybody to create, a worldwide disruption of the entire world's economy. I've walked through this with a lot of people who've called and been very worried, like what happens if the dollar collapses? Well, I've worked that through with people, because if you think about that, everything would come to an end automatically. I mean, how would anybody repay their debt in dollars if the dollar doesn't exist? How would the U.S. be buying all the foreign goods that we buy? How would the economies function at all? And if simultaneously, even in America, if everybody suddenly woke up and said, I am so uncomfortable with paper money, I want my money out of the bank and I want to convert it into anything else, that rush on the banks simultaneously around the world. I mean, imagine every city, every place you went, every bank, people standing out around the block waiting to try to get their cash out. The Fed would be printing money like crazy, because they will provide the liquidity. I assure you of that. The banks in America will not run short of money if there's a run. They've been very well shored up ever since 2008 and 2012. The Fed has required a lot more reserves held by banks. So the U.S. banking institutions are actually in fairly healthy shape and can sustain a lot of issues much better than they would have been able to in 2008 or 2012, by virtue of the Fed having forced the banks to hold much more large quantities of reserves. So I think the Fed, like Helicopter Ben would say, if we have to throw money out of helicopters everywhere to make sure there's liquidity, there will be liquidity. But that would create a massive inflationary problem. So a lot of this comes down to, and I know this sounds bizarre, but a lot of it is about faith. They need to create an environment, the Fed and the government, that you and I and everybody walking around in America still has faith in the dollar. Because if that faith gets cracked, we're going to experience some real trouble.
I don't have faith in the dollar. I just use it because I have to.
Well, by default, right?
By default, because that's the only thing they'll take. But it's now you also have countries though shoring up a lot of gold right now.
Oh yeah.
I mean, where does it take us when countries behind the scenes are gold? Like, what does that? Are they just doing that, which, in your opinion, because they just want to have leverage on it from a loss standpoint, or are they going towards something?
Well, I think it's about protection. That's the number one goal. Try to preserve the value of your currency one way or the other, and stabilize your economic environment. You're going to need to do something. Like, imagine if I put you in control of the Argentine economy, what are you going to do? You can't curtail the inflation rate. You can't stop the deficit spending. You can't get rid of all the debt, but perhaps you can shore up, something by owning a little bit of a commodity that will sustain its value better than this 60% inflation of your internal currency. I mean, that's got to be devastating. I think it's an interesting case to be made that why are so many banks and countries looking at gold? Why do they even feel compelled to do that? Again, it's because there's a loss of faith in these currencies. And again, I've always been worried about the way the U.S. dollar operates without a gold to silver standard. It's been troubling me since 1971, and it's certainly gotten worse. So I think people who've been accumulating gold and silver are being really smart about adding that counterbalance to what I think is inevitable. And again, I just want to be clear. I am of the mindset, and I don't say this lightly, that I don't believe in the complete destruction of the U.S. dollar worldwide to the point where it is absolutely worthless. I just don't foresee that happening. But I do foresee that the dollar will perpetually get weaker, and unfortunately, it's losing value a lot more quickly than it used to. It requires people change the way that they used to deal with their own finances.
Where is that breaking point then? Where, how low do you you spend the $5 for coffee, right? But at a certain point, even if someone can spend $10 for coffee, it's so ridiculous. At some point, there has to be that. I mean, is that a month? Is that 10 years? Is that 15? Like, where is that breaking point? Because I think we've been on this train for so long, the Ron Paul train, the libertarian train, the Constitution train, et cetera. We've all talked about this for decades, and it's almost like we've talked about it without it coming to fruition. But now we're like, oh crap, the Fed is out of control again. We all know, anyone of sane mind knows that they're going to overplay this thing totally, go into a recession. How do you not hit a depression potentially at that point? Like, where is that breaking point? That something has to be done.
Well, here's the big problem now. So recessions are not unusual. You know, they come and go throughout economic history. There have been tons of them. And the response by central banks is fairly straightforward. If you go into a recession, you lower interest rates enough to make money cheap. And if you can make the money cheap enough to where you can stimulate economic activity, you can resolve a recessionary problem. The weird part about where we are now is that they had done that already because of fiscal crises in 2008 and 2012, forced the Fed to drop rates to the near zero levels we started this whole scenario with. And then on top of that, we got hit with the COVID economic slowdown in 2020. And let's not dismiss how significant that was.
Oh, it was huge.
Right? So we saw a massive slowdown in the U.S. economy. I mean, you know, entire cities. I remember how bad it was. My friends in New York were telling me Manhattan was basically shut down.
Yeah, it was. There was no people on the street, essentially.
Everything was closed. I mean,
right.
It literally bordered up, and I mean, a literal shutdown of the economy to a level that no one had seen since the Great Depression. So when you experience that kind of activity, and the Fed had already addressed that problem by lowering rates to the near zero level we'd achieved, now for the first time they've again tried to resolve that problem by printing a ton of money to move the economy forward, which granted they've had some success with, right? Because we're not in that economic environment we were in 2020. We're seeing a lot more economic activity. But what is the result of the way the Fed managed to move that economy forward? This high inflation we're experiencing. So now the Fed has to deal with the inflation problem. Okay, so we'll raise rates to fight that off. But wait a minute, wasn't rates being too high part of the problem that caused the slowdown in the first place? So,
what is it? You know, if you do the same thing over and over again and you don't learn, that's called insanity?
That's the definition of insanity, right? Repeating the same thing over and over again, expecting a different result.
That's
so
right.
The Fed is playing this like, you know, it's like a Ferris wheel, you know, just ride it up and ride it down, or ride it up and a roller coaster would be a better analogy. So, you know, the Fed is fighting this weird problem of constantly trying to, which they started, absolutely, because again, I think you and I understand this. None of this would ever have happened with a standard gold or silver standard against the dollar. We would have never had any of these economic problems because we couldn't have allowed the first part of the problem, which is the growth of the debt and the overextension of debt and credit limits that were just way overstated and things that got completely out of control. None of that would have happened with a standardized dollar. It is the fundamental flaw in the entire economic environment is that we run an unbacked dollar in the United States. And as long as that is the case, we are going to have to experience these kinds of economic hiccups. And the Fed's job to deal with that progressively gets harder and harder each cycle because the size of the problem has exploded. It's not just a little part of the economy anymore. It's the entire economy.
It's the whole
and now
globe.
It's having an impact globally, exactly. Now it's global. So we're in a very unusual environment now that every central bank around the world is experiencing the same issue. You know, how do you deal with inflation, somehow keep your economy moving, not cause recessions or depressions? I mean, this is some tricky stuff that I just don't have a lot of faith in the Federal Reserve.
Well, isn't it kind of comical to think that they're going to raise rates that will probably push us into a recession, but then the recession is going to freak them out because obviously there's a downturn in the whole market, everything changes. But then they go, wait a second,
we can fix it.
We overdid it. Now there's a recession. Now we're going to lower rates so people have money.
Right. Welcome to the world, right?
God.
So the insanity of this becomes pretty evident, and it is up to the Federal Reserve to somehow manage this and produce a, let's call it an environment where they can convince the average Joe that they have this under control. and that this stuff isn't spinning out of control, and that they're not lost and merely guessing or taking stabs in the dark and really have no idea whether or not what they're trying to do will work. So I keep harping back to, I'm a macro guy. I don't watch the minor little things. I'm a longer term, bigger picture sort of guy. That's just the way my head works. So I look at this increase in the money supply since 2000, a 40% increase in the broad money supply in America. It's the single largest increase in the money supply in the history of the United States. And with that, how could anything else happen but cost of goods and services go up? There's no way that you can create an economy where you have an unbacked dollar and you increase the amount of dollars by 40% in 2 years and not have that have an impact of forcing prices higher. And look at what's happened to the labor market now. So when everybody was getting stimulus checks, it was a question of, well, I could sit at home and get a check from the government, or I could go back to work and probably make a little bit less. What makes more sense to me? I'd rather sit at home and take the free check from the government.
We had people telling us it was more profitable for them to be home than it was to work.
So where's the motivation then? Where's the
any
incentive, right?
We created a welfare state.
We've created the wrong incentive. So, with all of that, we've got a very unusual economic environment that I think has led us to have to address, again, what we know to be the reality of what's happening versus what they want us to believe. And I will say to you that we're going to see more and more examples of that gap between reality and perception smack us in the face. It's going to start happening more frequently because it's going to be harder and harder to ignore it. When the problem was in the billions, it was one thing. When the debt that the government was carrying was 50% of what the GDP was, it was manageable. When the debt we're carrying is 112% or 120% of GDP, you've got a problem. That's like you earning $150,000 a year, but having $175,000 a year in expenses. And then you raise your income to $175,000 a year, but your debt goes up to $200,000 a year. If you're constantly spending more than every dollar you earn, how will you ever repay your debt? And if the government can't repay the debt, that pile just keeps growing. And here's where we are. Interest payments on the debt right now, carrying cost of the U.S. debt, about $440 billion a year is what it costs the federal government to carry the existing debt. The interest payments, just the interest payments on the current U.S. federal debt has become the second largest item the government is dealing with in its entire budget. Of everything the government does around the world, think of every single thing the government does. Start with the Department of Defense. Think of all the military, everything included in that, from buying weapons to paying soldiers to financing all the wars, to doing all the things the military does, all the bases around the world, all the expenses to maintain all the equipment, buying new, whatever it would be, from bullets to tanks, airplane, everything all inclusive. That is the number one thing the government spends money on. The second on its budget is the interest payments on the existing government, just the interest payments on the debt. So I think this is unsustainable. And I believe Chairman Powell even agreed with that about a year and a half ago. He was saying exactly the same thing as he was still newer in his job and willing to make those kinds of statements. I think he's learned that they listen to him when he says that, and he sends ripples through the economy. So he's parsing his words a lot more carefully. But he's a lot clearer about what he says than, let's say, Alan Greenspan was. So we can tell a lot more about what the Fed's thinking because Powell's very open about it. And it's not very encouraging to listen to what he's saying because he's effectively admitted over and over again that they're hoping that their plan will work, but they're not confident. They're speculating. And it's just, honestly, it's like, take a shot in the dark and we'll see how this plays out. And if it doesn't work, we'll do something else. Meanwhile, the rest of us, we're just subject to the onslaught of whatever happens. Well, that's not very comforting. So,
sounds like you should hedge your bets with some gold and silver.
Yeah, fluctuation in prices notwithstanding, I still think you're far better off, counting on silver and gold than having the value of your wealth in these paper notes that are so subject to this volatile change. And as the stock market gets more and more volatile, it's weird when Treasury securities, the interest as low as they are becoming a competitive problem for the stock market again. The Fed, again, one of the offshoots of the Fed raising rates is it's making those bond yields a little more attractive to investors. And if you can get 3 or 4% in a government bond, even though you may have to hold it for 20 years, again, it's beginning to look attractive to people. Just like if you were in Asia, you might actually like the idea of a minus 2% yield on a Treasury security, because you're guaranteeing only losing 2% of your money over the next 12 months, as opposed to if you put it in the market there, it could go down 30%. So by default, a negative yield looks attractive.
The Dow is down 400 right now.
Yep. And again, this volatility is going to become a bigger problem as we move forward. Look what's happening as the companies have reported earnings. And I think we had talked about this. Yep. My outlook was, if they had falsely raised the stock value by using that cheap money trick, when they had to report current earnings, they better show a really strong quarter to justify this now higher stock valuation. And if they don't, they should expect the stock to get crushed. And look what's happened to some of the high-flying stocks. I mean, the technology stocks, they've dropped in some cases 20 or 30%. It's massive that they've gone down. And everybody's now saying, well, we don't really think it's going to get much better. Look what happened to FedEx. I mean, they had their worst quarter since they went public as a company this quarter, because everything is kicking in at once. So this gap between, the artificial price these stocks had achieved and where they should really be valued is so wide that if a company comes in and misses earnings, they're just getting crushed. So I worry about the people that are getting their quarterly reports on their retirement accounts. They're not going to be happy.
There's an article that just came out, I guess, today. Like, it's breaking news. They're saying Zuckerberg made a mistake because he has lost $71 billion of his fortune, and the metaverse thing is down 56% year to date. Like, big miss.
Right. That's a half of its value gone.
That's insane.
That is insane, especially when you think about what Facebook was.
Right. Well, that's what they're saying. He made a mistake. He should have left it where it, like, from a company standpoint, people were used to a brand. He switched the brand and just made a catastrophic mistake.
Yep. I mean, maybe 10 years from now, we'll look back and say, okay, now we get it, and maybe he did something that makes sense. But at the moment, it does look like a huge error. It's like AT&T and DirecTV getting together, or I mean, it was just like that was not a good idea. I mean, a lot of people looked at that and said, no, I don't think so. But yeah, sure enough, and look at what happens to the valuations. But yeah, a 56% haircut in the value of your stock. If you're the CEO of the company and it's a publicly traded company, your stockholders have got to be ready to just hang you from the rafters. Nobody's going to be happy with them. But now imagine you're the institutional guy. You're not an individual stock investor. You're controlling thousands of people's funds, and you're trying to invest in the markets to try to make money for people. I mean, good luck. This is a very difficult market for people to show any kind of yield and growth, both because there's volatility in the stocks that are creating big problems, and because there's no safe haven to park your money where you can say, all right, we're getting 6 or 7% yield out of this treasury, so we'll sit on that for a while until things settle, and then we'll go back. Even the guys that trade stocks, I mean, every day they're kind of going, well, the market's not good, and we think it's going to continually be volatile, but we think there are some stocks that are worth buying. It's getting to the point you got to be a razor-sharp trader to piece between all the stocks and maybe find something that still has a relatively good value. That's not the kind of normal market environment people are used to. I think the investors have been spoiled for so long because with all this cheap money coming into the year 2022, remember when interest rates were going down as the Fed was fighting off the recession problem or the slowdown, that helped the stock market. So everybody investing in stocks was seeing gains. And it almost didn't matter whether you knew anything or not. You could have taken a dart and thrown it at a chart of stocks, and I don't care what you would have picked. Everything was going up,
Right.
because they were all, favored by the cheap money environment. But when that punch bowl was taken out of the party, everybody's left standing around, and they're like, "What? Now what?" And I don't think people are going to be very pleased as they see continued volatility. So I have promoted gold and silver coins for 38 years on one pretense: diversification. Just don't leave too much of your wealth in any one market. This way we can kind of bear through whatever's going to happen. We just don't know what the future holds for certain. We can make the best expectations based upon the information available. But one thing I've learned over the decades is that in every economic environment, people who had multiple asset classes in their portfolios did much better than people who were, by accident or on purpose, too heavily weighted in any one market. And I don't care what the market is, and that includes gold and silver. I don't think people should be exclusively in any market, including mine. I think this is about having a percentage of your wealth in different areas so that whatever comes up, we've got a chance to survive.
And we go over this every time, but I find out afterwards because I get questions from people. I'm sure you get questions as well because are you fielding phone calls basically all day long?
Yeah, that's my job.
That's your job.
That's what I do.
That's my job. Talk to people, right? It's so funny because I had somebody go, "Well, it doesn't matter if everything crashes and there's no money left. Doesn't matter. Gold is silver. Like it doesn't matter. There won't be." And I go, "There will always be an economy of some kind. They're always going to be."
Right.
In gold and silver, even if you took the Constitution out of it, every country goes back to gold and silver. They go back to gold and silver no matter if there's Constitution in place in America or not. There's gold and silver because that's where they all go. But there's always going to be a time and place for money.
Absolutely. I mean, you have to have something that can function as a form of wealth. And if people lose faith in paper, they're going to go to something else. Now, gold and silver have been used for thousands of years.
Right.
All over the world. And there was a reason for that. It wasn't, arbitrary or accidental. They do have some fundamental properties that make them a viable method of holding wealth. The first and most important is although they mine gold and mine silver now, it is a difficult process. It's an expensive process. You can't go into your backyard and stick a shovel in the ground and dig up an ounce of gold. It is a difficult, expensive process, and then it has to be refined, and there's a lot of work involved. And because it is a limited commodity, it's not easy to find, and there's a limited amount of them that exist, both gold and silver, and tremendous usage, even outside economic things. They're used industrially as well. Right. So there's tremendous demand for the metal being produced. And if the supply of it,
conductivity.
Absolutely, right? So, and think about the portability of gold and silver. You can physically move it. You could take an ounce of silver and cut it into 1,000 pieces, and each piece is worth 1,000th of the whole, and you can combine it back together. You don't lose anything. And again, it's portable. It doesn't deteriorate. It'll last for thousands and thousands of years and not change at all. Its status remains exactly as it is. It doesn't rust. It may change somewhat in color, but it doesn't deteriorate. And so having these properties makes it a very valuable and useful tool. Plus there's the physical beauty of the brightness of both gold and silver. So to use them, as a show of wealth, they've been the store, kings have held gold forever. And again, it's because it has that viable, hard to get commodity idea and sustainable properties. And again, all the electronic uses and all the demand for physical. Now, I've said to somebody, imagine if you bought somebody cuts down a tree and you want to buy the tree lumber, right? Just, the tree itself has been cut down. You're going to pay X for the tree. Now somebody takes that tree and they cut it into, nice 2x4s and clean it all up and take the knots out. Now how much are you going to pay for that?
Much more.
Same, let's say, amount of wood, right? But now what happens if there are no more trees? What if they can't grow another tree? And suddenly you never can grow another tree. Whatever existing wood is floating around is all there ever will be. What's going to happen to that price of that piece of lumber?
Skyrocket.
It's going to skyrocket, right? So gold and silver have these really interesting properties because they're getting so much harder to mine and refine that the usage right now is chewing up about everything they can produce. And if the demand should kick up even a tick, we're going to suddenly see a worldwide supply problem that cannot be corrected. And with the United States coins, what I hearken back to is the fact that we are already like that, no more trees scenario, because they stopped producing the silver coins in America in 1964. We haven't minted one since as currency, and we will never be able to go back and produce more of them. So that supply that people are holding, those people that were smart enough to buy silver recently when it dipped, and those people that have physical silver and gold, they own something that cannot be reproduced in quantity. And the availability of this is getting tighter and tighter, more so than the metal itself. So there are huge advantages to owning it. And a lot of people have asked me about, and I know you get this too, like how do you use the gold and silver if the, let's say, economy crashes or the dollar's worthless? Right. So do we have a scenario where you take silver quarters down to a local supermarket, and try to negotiate to buy a bag of food? I think if it got that bad, there wouldn't be enough gold and silver coins around for people to buy.
No.
I just can't imagine what the environment would look like if simultaneously everybody in America decides or loses faith to the point in their paper money, they don't want to hold it anymore and they just want gold and silver, or a supermarket won't allow you to buy your food by giving them a $20 bill and you have to try to conduct commerce. Well, you'd be very lucky to have gold and silver coins. At least you'd have something,
right,
to be able to negotiate and exchange with. Again, I don't foresee that as the likely way this will play out. What I see instead is that those gold and silver coins people acquire now are a store of value. It's a safe haven to keep your money. And at some point in the future, what you will end up doing is converting those silver and gold coins back into whatever the form of currency is, whether it's paper money or digital currency, and then utilizing that to actually conduct commerce. Although I have seen people who bought houses with their gold coins. I've seen people bought cars with their gold coins and silver coins, and people have negotiated all sorts of deals with individuals. I see that all the time. But on a broader case basis, I think the more usefulness in the gold and silver coins is a store of value rather than being directly used to buy goods and services. Because I'm just afraid that if it really got that bad, to where I can't pay for food with a $20 paper note anymore, I mean,
you have societal collapse at that point.
Yeah, I'd be worried about not having enough guns at that point.
Exactly. That's the first time, Fred, I've heard you say exchange it in for digital currency.
Well, because it's likely that in time
it's coming.
We're going to experience that. I mean, I remember the advent of credit cards beginning to take over cash transactions.
Right.
There was a time where people were hesitant to spend money on credit cards. It was a newer thing, and only only in certain instances do people ever do that. Now, if you talk to an average restaurateur, they'll probably tell you 75% or 80% of their transactions are on a credit card. So, the technology will continue to evolve. And I wouldn't be surprised if a decade from now, money has faded to a point where it has become less frequently used and we're moving more and more towards some other digital form. I just don't think this happens quickly because, think about how long would it take to educate older people to suddenly tell them that you can't spend your money anymore. I mean,
it's not that
write out checks. It's not going to happen overnight. It's going to take a while for something like that to occur. So I see it as a longer term process.
Plus, you have all of us I'm in my 40s. You have people in your 50s, and you have people in your 30s now too, still, who are in this constitutional mindset because there is this regeneration, reinvigoration of kind of America constitutionally, and we know about this whole cash thing. I use digital currencies, but I still like my cash. I like my change, etc. So it's going to be hard to push everybody over to just digital. Just not going to happen.
Right. I don't think it'll happen. It'll be a transitional thing. It'll take quite a bit of time to get people accustomed to, and it creates an awful lot of changes in the structure of the way the mechanics of banking would have to work.
Right.
Everything would change, and that's going to take a lot of time too. Exchanging people's funds for what's in their account and getting it all, again, there's a multitude of things that I don't think people have walked themselves through to think about the cascading level of things that would have to change to move completely away from paper money. That's why I'm not suggesting it's not likely to happen over time, but I don't see it happening in a short-term black swan event. I don't think something's going to happen next week or next month that all of a sudden we go from having paper money to nobody was willing to use it anymore. That to me seems unrealistic. I just don't think that the mechanics could work, smoothly, and that would create so much upset throughout the world's economic environment that nobody would benefit from that. So I don't think that's the goal. I think that's sort of a, more long-term idea. And what worries me about the digital currency fundamentally really doesn't change much, except we lose all of our privacy.
I know that's
all
the big. The CBDC is a lot. I mean, there's a decentralized crypto as well, which you could use as infrastructure behind the scenes for payment systems, which I think is already occurring. But the CBDC itself, what a terrible idea! Total loss of privacy, worse than the Patriot Act. I mean, a mess.
Absolutely. I mean, can you imagine if the government controlled everything, because they could see every transaction now? I mean, every transaction. And I worry about the social engineering problem.
Sure.
So, and I've, alluded to the simplest idea of that being you're using a credit card to buy a pizza and it gets declined because the government socially decides you're not healthy enough to eat pizza, you should be eating a salad. So it won't let you buy the pizza, right? It stops you from buying the pizza because they have control over the currency. And I use that as a funny example, but imagine that on a broader, picture where maybe they prevent somebody from buying a home, or they stop you from doing whatever you want to do because they deem it, unnecessary or unhealthy for you. They start dictating because they control the currency. They might have that ability to do that. This was always the idea of private money. Of wealth in the hands of the public, in control of the public, never having a government agency having control over people's money. I mean, the more I read about the founding fathers and their thought process that went into the idea of fundamentally starting the country with a standard of gold and silver as the money system, the more I come to understand what they were worried about. They just didn't want to have to deal with the problem of somebody interfering in the value of money. They were like, we have way more other things to concern ourselves with. We have to create a government. We have to create a system where we can get all these colonies to say we're willing to join together as one entity. Because remember, that was not an easy thing to accomplish. Everybody seems to forget that the colonies were very different before we decided to come together.
No one remembers, Frank, because no one reads history anymore.
Well, that's an unfortunate, yeah. So, Virginians were really different than New Yorkers. And people in New Hampshire were really different from people in Georgia and South Carolina. The mentality was different. Their mode of operation in their economy was different. They saw the world differently. They were not similarly minded. And somehow we had to kind of get them all to come together to not only take on the world's greatest power, Great Britain, but to say we were better together than as separate entities. And that was that meme that Ben Franklin drew with the snake with the various parts that represented each of the stakes. And it was basically join or die.
I have that flag.
It was join or die. In other words, if we don't all come together, we're screwed, because Britain and Parliament in Great Britain are being abusive, and we're never going to be able to survive if we don't join together and come together. So with all of those concerns, the founding fathers went through a process of looking at how many problems had come around in various countries, including the King of England facing economic problems because he owed bankers money. So he was exhibiting problems because of pressure from bankers.
Those damn bankers.
Right. In the 1750s, this was a problem. So when they said, okay, we're going to start a new nation and we're going to go to the trouble of separating ourselves from Great Britain, we need to establish a monetary system here that is free of influence. And that's why the gold and silver standard was put in the first part of the United States Constitution. It's in Article 1. They didn't wait to put that in later on as an afterthought. It was in the first part. One of the first things they said is, okay, let's take this off the table. Remove this as a problem. Maintain a standard of gold and silver against money, and we'll be fine. And still that battle continued to go on. I mean, the first bank charter that was granted, a 20-year charter, lasted till 1812, from 1792. After that, the public was given the opportunity to look at the bank and say, how did they do? Did they do a good job of maintaining the value of our money? If so, we will renew their bank charter. If we don't think they're doing a good job, throw the bastards out and let's get some new people in there that might do better.
Sounds like a good idea right about now.
Right? So we don't have that opportunity anymore, unfortunately, because the Federal Reserve Act in 1913 changed everything. It created this new entity that was given authority to regulate and control the value of money by virtue of Congress enacting them. It is still congressional, so therefore legal, but it did change everything because it shifted who controlled money from being in the hands of Congress, that if you and I don't like our Congress people, well, we can vote them out and put somebody else in.
We thought.
But you cannot vote out the Federal Reserve.
Right.
And this is where guys like Ron Paul said, okay, I see the problem. The problem is we can't get rid of these guys. So what would it take to end the Fed? How do we get rid of the Federal Reserve completely? Can we do that? And his argument, which I would agree with 100%, there is no fundamental reason why the United States Treasury cannot manage what the Federal Reserve does without the middleman, without the Federal Reserve. We don't need that central bank in the middle. We can have the U.S. Treasury handle. And a lot of people will say, well, geez, that you're going to leave Congress in control of money? How good is that as an idea? Well, it may not be a great idea, but at least we can vote them out if we don't like what they're doing. As opposed to what we're left with now, I don't have a choice about dealing with what the Federal Reserve Chairman decides to do with interest rates. I just have to deal with the impact of his trying to manipulate the economy I live in to try to sustain a problem that they created in the first place by printing a ridiculous amount of money to solve the problems that they created by allowing the government to spend money it doesn't have. It all comes back to that sound money versus unbacked currency.
Fred, I have a belief, before we finish off, that this is going to be resolved in my lifetime, rather than longer. Because
I hope you're right.
I actually just feel like the pressure cooker is too much at this point, and especially they're going to overplay this. I think they're going to throw it into worse than a recession. That's just my personal belief on this, and I'm not a money historian, but they're going to screw this up. People are going to be pissed, and corruption is just at an all-time. I mean, so many people are waking up to the corruption of what's happening and the insanity of this. And the end the Fed, audit the Fed thing was a big deal for a while, and it was only so many people watching it. But now there are so many people waking. I mean, the fact that Steve Bannon went on CPAC and said to thousands of people and millions of people watching around the world that we need to end the Federal Reserve.
Yeah. When I first started in this industry, nobody knew what the Federal Reserve was.
Right.
Everybody I talked to thought it was a part of the U.S. government. I'm like, no, it's a private entity.
Right.
It's a group. It's a coalition of bankers. That's what it is. And central banks around the world are all tied in together in this process. But this is not a government agency. This is a private entity. And the idea of ending the Fed met so much resistance. I remember when Ron Paul sort of shifted, he said, okay, well, if we can't get everybody to agree to end the damn thing, can we at least audit it? Can we do that?
Right.
Let's at least look at what they're doing behind the scenes, because the Open Market Committee operates in secrecy, and God only knows what the Federal Reserve is doing underneath the table. Yeah, they put out their reports that we can look at, but are we really getting all the information? Let's go ahead and audit the Fed. Couldn't even get that to go through Congress. They couldn't even agree to just say, well, let's go ahead and audit the Fed. There was so much resistance. And again, I think there's a really fundamental lack of understanding of what the Federal Reserve is. I've been dealing with this for, almost 40 years of trying to explain to people that we have a functioning entity within the United States that controls the value of money. And it's not a government agency, and we have no control over it. So knowing that we're subject to whatever they decide to do, I have recommended that people take the power themselves and impart amongst themselves that personal responsibility to protect their own wealth. Let's not count on the government to do the right thing. Let's not count on the Fed to resolve this weird economic environment and pull off the magical soft landing. Let's recognize there is a fundamental issue here and diversify one's wealth. Please, folks, if you're listening, make sure that you counterbalance your assets with a good, solid position in physical wealth, because otherwise you're simply subject to the changes in this paper money value that are going to continue to get much worse. And it's going to impact people's lives because unlike the old days where the inflation was so minimal that you didn't really see it unless you looked over periods of 10 or 20 years, we are now experiencing inflation that's being really effective to people's assets in short periods of time, like a year or 2 years. So any money that you're sitting on for the next 5 years, just don't leave it in paper. I just don't see the point.
Absolutely. Fred, can I have you back in like a couple weeks?
Yeah.
Awesome.
Yeah, always try to find some time for you. I have also put together a little gold special for the listeners, just something I was able to get together yesterday. I've got 4-piece gold sets. So this is the Liberty Head gold set. So these are the coins before 1907. It's a $20, $10, $5, and $2.50, all graded MS63 by NGC. So these are all mint condition, graded, certified, sealed, and tamper-proof holders. Beautiful examples of these original American gold coins that have not been minted since 1907. The Liberty Head gold pieces, and the set together, all 4 pieces, $5,850. So anybody who's looking for kind of an inexpensive entryway into the gold side of the world, I like this as a recommendation.
I'm a sucker for a deal. Text me.
It's a great deal. And then I do have silver. Everybody's been asking this week, do we have silver coins? We were running really short, but we're back up to I'm okay again. I've got both bags of $half. I also have dimes and quarters. So we do have the silver availability again. It is a little haphazard. And honestly, I've never experienced this before in the 38 years I've been doing this. I have not been able to hold inventory. So when I say I have silver, I have it now. 3 or 4 days from now, I may not have $half again. I may not have quarters. It is getting progressively haphazard, I'd say, is the best way to look at it, for us to continually store our inventory. So I like to try to take advantage of it while the prices are a little bit lower because of the dollar and because the available inventory is here right now. So we'll be happy to help anybody that's looking to add to their physical wealth.
That is Fred at US Coin Capital, CAPITOL.com. What's the phone number, Fred?
800-878-COIN, 800-878-2646.
Thank you so much, sir. I appreciate you today.
Hey, man, always great to see you. Happy to talk with you anytime we can find the time. I know it's been a little nuts, but we'll try to keep up with what's going on.
Let's do something in a couple weeks.
Okay.
All right. Have a great day, sir.